Good morning and welcome back to another pipeline trading video. Today, the markets are opening with a bullish tone. And this is all again after news that Iran ceasefire was extended. But traders, investors, whatever it is that you're doing, remember this is educational. This is not financial advice. Trade or invest carefully today. That's what I want to get across. I said this, kind of feel like a broken record, sound like a broken record, but the market is rallying on relief while oil's still elevated near $100. Like if we look at the oil market right now, we're above the 50. If this breaks above, let me just see this. If we break above 93.35 and hold over the 20-day moving average as support. Now, don't get me wrong. I think oil's going to fall and oil's going to fall hard. But right now, we could get one more spike up, which could send the markets down. So that's the only thing I'm really, really concerned about. But overall, I do think the markets are going to continue to rip up a little bit, maybe. And we will see higher highs. I don't think the top is in. It's just in this market with what's going on, anything that you wake up to, bad news, this whole thing starts coming down, right? So the question you have to ask yourself, is this really where I would want to be buying into the market? My answer would be no. Because what I'm looking for myself, and there's a few people I'll give a shout out to. I've been speaking to throughout the night. So this is a shout out to you guys because we're talking about this. I would be waiting for a pullback. I even put in the target zone last night. I drew this in. Just that's what I would want to see. I would want to see a healthy pullback, not a crash. Hold support key levels, and then build its structure and make its next leg up, right? That's what I want to see. So this rally can continue, but just know it's fragile. So another thing I want to go over, we had strong bullish reactions. GE, they beat expectations and raised their revenue guidance. So that's one of the reasons why their stock was surging pre-market. Boeing reported better than expected sales and narrower losses, which is good. United Airlines, they beat earnings, though warned of fuel costs. So if anybody out there is looking at airlines, you probably get some really good deals on Airbnb and vacations now because people probably aren't doing it with the cost of things. But airlines as an investment, tread lightly because if oil goes up, it's going to hit their bottom line. Adobe rallied after announcing a $25 billion buyback. So we could be seeing some of that too go on in the near future, which it's great for shareholders, but the price going up is a little synthetic in a way. Capital One, they missed estimates, and this one stuck out to me. They increased credit loss reserves. That's a negative signal for consumer credit. So that's something that is very, it's like a yellow light flashing, right? Like yield. That's something to be very, very cautious of. And after the close today, we have Tesla, we have IBM, and we have Moody's. So this will have a big effect on the market tomorrow, depending upon what they report and their guidelines, or their guidance, I should say. S&P levels today, we have the first breakout zone, 7,080, future resistance momentum, and some of this could be dated because I already wrote it down prior to this, and I just had a really busy morning and a really busy night. Future resistance would have been 7110. And then a squeeze zone would be 7,150. This is on the S&P. So support levels, psychological support level will be 7,000, and a major trend support would be 6,965. As long as price holds above that 7,040 area, bulls remain in control intraday. So keep an eye out for that. The Nasdaq remains stronger than the S&P due to AI. And this is again plus Tesla earnings hype, right? That's a big deal. Bullish levels, we have a 24,350 breakout trigger. We have momentum zone of 24,500. If Tesla delivers, expect 74,700. So again, support psychological levels always going to be that even number, 24,000. And support, the trend support would be 23,850. So my read on this is the Nasdaq is still the leader, and if it breaks higher while the S&P lags, stay focused on tech. It's that simple. Other levels to watch: crude oil getting close to that 100. If we go above 101, inflation fears will return, or just even say 100. I don't know why I put 101. Below 98 is bullish for equities, which is, we're way below the 98. But it does look, again, to go back, we're above the 50-day. So that's not really good. You don't want it holding the 50 as support. And the yields, which I don't have up here, but I will. The 10-year yield. Pressure on tech above 435. So we're below, hence why the market is going up. If we go above 435, that's going to put pressure on tech. So this is going to be a tricky one. I mean, there's the further out you go, there's a big liquid. It's a tough read, but yeah, because we have a new Fed chair coming in, right? So it's going to be interesting to see how this plays out, because right now with the debt that they have and the war, typically in wars, they need lower interest rates to fund it, right? However, there's a bit of a pickle they're in because they're in a really tough situation because of the amount of debt. So with AI, the whole idea is it's going to make the GDP increase astronomically, which there is some truth to that. But I don't think they're going to lower rates like they did before. And if they do, that would cause the market to have a massive run. And it would be, again, risk on and low rates, higher market, and devaluing of the dollar, right? Your buying power goes down. So I don't think they're going to do that now. And the charts aren't showing us that they are. So keep that also in the forefront, because we could get a spike in rates. And right now it's, again, it's holding above, right? You haven't seen anything drastic happen, but this chart showing us that we could get a spike in rates up to 4.7. So hopefully that doesn't happen. So what matters most today? Again, it's the ceasefire hold. Oil cools, Tesla guides strong, guidance is strong, yield stable, and that will equal the S&P likely pushing to new highs. Bearish scenario is the Iran shipping headlines, oil spikes, Tesla disappoints, yields rise, fast sell-off will happen. Another thing that I want to basically touch on is, of course, I got to do Bitcoin and ETH, because, again, a lot of people asking me about this throughout the week. Nothing's changed really in my view. One thing I want to, like, you look, what's changed? Like, that's really the question you have to ask yourself. These lines have been in. It's a parallel channel. This is a bear flag. And another thing that I was paying attention to is, yeah, we could have a cup and handle. This area right here, let me see if I could just pull it up on my other screens. We have massive liquidation on the weekly time frame of, let me just see the exact. You're talking over $600 million between the 78 and 80 price target for Bitcoin. So right now, shorts are getting squeezed. Anybody who is on massive leverage is getting absolutely annihilated right now. And like I was saying in the other video, we broke this head and shoulder. It's still intact. Typically, you get a leg down, it breaks, and then goes down. If you look, and the reason I put the Gaussian channel in is so that you could see. A lot of people think the moment the Gaussian channel turns green, say la vie, we're going up. Think again. Look at this. When green didn't make a new high, didn't break up above, for this to be invalid, we would have to break above, I would argue, what is that? 97,000, right? You need a massive impulsive wave, a test, and then go. Because right now, to me, this is just, this could be distribution, right? When it's in an uptrend, this is accumulation. Accumulation. Let me see, I'll just draw this in, right? You're seeing down, down, down. That's all accumulation. And we had our last one, right? Accumulation. Now, look, it's the opposite. See how it's going up? So, yeah, again, I would be favoring, and this doesn't mean that it can't change, right? That's not how the markets work. Something can happen to, literally make everything go the opposite way. And this could have just been a big massive run, a pullback, right? Like, as some people would argue, you had your wave one with the pullback. This is the wave three. You could have a wave four. You could have a wave five. There's lots of different analysis out there. But the fact that we dropped this much, we're now in a downtrend. So don't let that fool you. Until we do this right here, this circle right here, until we do that, break above the 200-day, everything stays above. We broke above this area right here, right? That's what we would need to do. So the closest area to break would be where I just did up here, around 98,000. If we broke that, then this whole thing's invalid, and I would say, yeah, we're going to go make all-time new highs. And I would jump on the bandwagon. And on a positive note, like, there are some arguments for this as well. Like, we are holding above the 200-day moving average. So that's where a lot of people are saying this could be, if we hold another run up before the whole market collapses. Because again, remember that chart I was talking about, periods when to make money? It said 2026 is a good time to get out, and prices are high. So I do think of that in the back of my head, but until I see the moving averages and us break certain levels, I can't do that. I can't really have much conviction in that thesis. So I would need to see us break above the 50-day, 10 and 20 cross, and hold above this This right here is oh man, I'm having a brain fart. An order block. This is a bearish order block for shorts. So can it happen? Absolutely. Do I think it's going to happen? Right now, no. Probability shows we're going down to the low end, and there's a lot of liquidity with longs down here, right? So I favor that. And also, too, another thing that I noticed is we are now in the greed zone at 69. So think about that. Be greedy when others are fearful, be fearful when others are greedy. So today we are in the greed zone, almost at 70 on a fear and greed index. That's not good. So that's another reason why I'm favoring a sell off. We're at the levels. You go to ETH, it's the same thing. Now, another thing I want to talk about real quick before I end this. If you remember, I talked how I sold cover calls somewhere around here. And I said I was a little early, but I also took it because I like the time decay. So to give you an example, what I'm going to show you is it was on BMNU. Right now, they're trading at the ask is 60, bid is 45. The last was 52, but really it's lower when I look on my level 2. Because because of the spread, you're not seeing like the volume's not a lot. So when you see the actual trading side of it, you'll have like 6,000-7,000 on the ask, 6,000-7,000 on the bid, and it's this type of spread. So the chances of it actually being right at 60, like they're showing on the ask, because this is showing that the price is up 40% because it's 60. It's actually not. So just so you understand this, remember there's time decay. Look at the implied volatility. Remember what I told you about the delta and the gamma and the theta and the vega. Go learn those because they're important. But this is showing that we have a 72% chance of closing above the $2 strike, which isn't really good for me because I would prefer it close below so it expires worthless. I don't have to give any premium. However, when I look here, this is showing that in June that there's a lot of open interest at 2,000, which is shocking because you would think it would be way higher and that people would remember if it closes above 2, all these people have to sell the stock at 2. So that's bullish, right? But at the same time, is it bullish? Because who would want to be that far in the money, that far out? So the good thing is, I hope it continues to rip up. I got paid over 55 cents per contract. So the reason I wanted to show this today is even though ETH is at a higher price, BMNR is at a higher price than when I sold these calls. Let me just pull this up. Right? ETH is, BMNR is here. I sold them up around here. Now, what's interesting is time decay. Learn that because that's a huge deal. So right now, this could be, some people could argue, like I was saying, there could be a cup and handle. But at the same time, one of the things that I also am looking at is we could have a bigger, that's a head and shoulder, baby. And if we break, no bueno. That is not good. So we need to break above this. Again, we have to get above this area for it to be invalid. And like I said, I'm a shareholder in BMNR. I hope it goes for a ride. But right now, I want to see things cross and hold, and the headlines aren't making me any more comfortable. If we go to Bitcoin, this is also, again, the same thing that I was looking at. And I did this, I think maybe a month ago, I saw this forming as a potential, right? Head, shoulder. So remember, a head and shoulder doesn't need to be perfect. It could be, one shoulder higher and deformed. So keep this again in the back of your head, put it to the side and watch, and let's see what happens. Because remember, when things drop, the market makers and the people that know what's going on and control the market in a way, because I think I read a report, Goldman or JP Morgan, they only lost like 2 days out of the whole year, 2 trading days. Like most of what they make they're all winners, right? They're they're the market makers. They're not going to be obvious with their play. That's where another thing that I think that everyone should learn is Wyckoff, right? If price spikes, so should volume. That's accumulation. Distribution, as price falls, volume should rise. As price spikes up, right? Volume should fall. So keep that in mind. Understand that. I know it's probably confusing. The first time I heard it and read it, very confusing. So I'm going to repeat it. A bullish market, the price rises and so does the volume. As price falls, volume should fall. That's in a bullish market. A bearish market, price falls, volume rises. That's distribution. As price rallies, volume falls. So I hope this helps. Now, as we get to the back end of this video, I wanted to just point out what I said yesterday with HIVE. So the target on HIVE has hit. So that was a really good trade, double-digit trade. And I just wanted to show you this because we've been talking about it. And it should go higher, but the target was pretty much where I said it was going to be, the 200-day moving average. So I wanted to just point your attention to that. And my closing thoughts today could be calm all day until one headline changes everything. So stay patient. Let levels guide you, not your emotions. If you found this helpful and you want more breakdowns, do me a favor. Subscribe, hit the bell icon to stay connected. As always, stay disciplined, trade with intention, and God bless you all.